All right, hello everyone, and welcome to today's weekly live stream with myself, Greta Wall. I am back from maternity leave, so hello again, and David Prince. David, thanks for joining me for this today. We're going to be talking a lot about IWM, weakness in tech, Tesla, previewing Netflix earnings. Lots to talk about today. Quickly, just show some disclosures here for T3 Live. David, how is your trading day going so far today? Just a quick little summary, and then we'll get into the details.
Yeah, I mean, it's great, grateful. It's fantastic. Not a complaint in the world.
All right, great. All right, so let's get into our topic of the day today, and that is IWM. Real quick for everyone, if you want to work with David and have days like this, Tesla, beautiful call, thank you, insane, greatest day in the history of days. This is from last week. You can go to t3live.com/DP to apply to work with David. Again, that's t3live.com/DP. So if you're listening into this today and you're like, I got to work with this guy, that's where you need to go. All right, David. So you are bullish IWM, the small caps, as are most people in the market. But you've had a thesis on IWM for quite a while now. Even pre me going on maternity leave 3 months ago, you and I were talking about how IWM would be the catch-up trade when it starts. This is a look at at your trade last week. You started these August 16th, 205 calls last Monday. You took profits throughout the week, held some into the end of the week. And then yesterday, you actually rolled up those 205 calls into the 220 August 16th calls. So talk about your thesis on IWM and how you've been navigating this trade.
Sure. So I find we're seeing the same patterns again and again. By the way, I see a glare, so hopefully you can see me okay. But we're seeing the same patterns over and over again in different vehicles, right? But I was telling Inner Circle that Tesla is not that different than IWM. And a lot of people would think, you're out of your mind. Well, how could you compare the two? And then I said AMD, which is a huge trade for me recently, wasn't that different than both of those. So I think we're at the later stage of a bull market, in my opinion, right? Doesn't mean we're about to crash or anything like that, but we've come really far. Valuations are not cheap by any measure, at least big cap wise, small cap more so. And as we were crossing 500 on Qs, there's the thought that, listen, IWM will eventually happen. And a lot of people were like, listen, it'll only happen when we finally get a rate cut. Till then, it's just dead money. And I look at things from a valuation perspective. If the Qs are 500, then IWM is today at 201, 200, far cheaper than it's ever been that I can remember, right? Versus what's going on in the rest of the market in big cap. Same kind of situation with Tesla versus the rest of Mag 7. The same situation with AMD when Nvidia was back to 140 and making new highs every day. So take that template. Everyone's been looking for the breakout, and then you add in soft NFP, you add in friendly not PPI, prior to CPI, you add in a really friendly, I can't remember what the PMI, I can't remember what the number was, but basically 3 or 4 numbers that were much more friendly to people looking for interest rate cuts, right? We had about 4 of them. And sometimes I don't believe in those numbers because you get a really hot one, then you get a weak one. But we had a series of 4 numbers that basically said the economy might really be slowing down and inflation might be actually more under control than it's been in a couple of years. So I looked at the situation and thought, okay, we just saw Tesla ignite and it went nonstop about 80 points. Then we saw it with AMD. Now I have the evidence pre-CPI to suggest this CPI might be light. And if it is, do I want to buy IWM just roaring? Or do I want to be pretty decently positioned ahead? I'm pretty comfortable. If this isn't the CPI, it is coming. So it was long both stock and calls, and then added to the exposure that day when we got confirmation. But the way we added to exposure was interesting. I also said this is a green light to sell big cap. It's not that there's something wrong with big cap, but probably our best alpha generation was Thursday. It was Thursday, right? It was CPI Thursday, just so I don't make any mistakes here. Do you remember?
Yeah, CPI was Thursday, PPI was Friday.
Okay, so off CPI, I said, not only does this mean IWM's green and we go and we break through that 210, 212 resistance, this means you got to get short the Qs. There's going to be tons of money that come out because it's an excuse to sell. So that's how we played it. We added to exposure to IWM, and we actually really pretty aggressively went short the Qs. I came in with a Q hedge because I already thought they were overbought and had some risk. So I was in 498, 499, and then 501s, we were shorting the Qs, and seriously didn't cover until like 492, 493 that day. So that was kind of how the trade began. Those were some of, I want to say the, let's say info bits, right? That I used to say, IWM finally breaks out versus everyone waiting for, say, September, October. I always, and many people knew, the trade's there, right? The question was, when does it start? So I got lucky by using that information, saying, I think it starts right now. And then knowing that once it starts, it ain't going to be a 2 or 3 point move, right? Because, by the way, you don't have to be smart, because we just saw what happened with Tesla, and we just saw what happened to AMD. But this specifically is far more important because it has underperformed for 3 years running and actually has some very real companies earning very real money in. And then lastly, interest rates were friendly, and that obviously helped everything ignite.
You've talked in the past many times about how one of your, personal weaknesses is holding your winners for long enough. Get out of trades sometimes a little early. You're a great stock picker, but that's where you think you could improve yourself.
Yeah.
When it comes to IWM, you've held really long into these calls, and instead of just taking all of your profits, you rolled them up into more calls. Is that a strategy where you're, extending the wins on this trade versus getting out of it and starting something new?
Yeah, it's kind of either I hate the market and I want to sell everything, or, well, IWM just had a 8-9% move in a straight line. Now it's coming on 10, or it's over 10%. But where is it over the last year, right? Or specifically since January in terms versus the market, still underperforming a great deal, right? If you judge it against Qs, where is it over the last 2-3 years? And where is it as a PE? Or just if you're a valuation investor, right? The PE is far, just, I don't know, it's half of what the Qs are. So when you look at it from all perspectives, yeah, it still has room. And then you can be a chartist and you clearly see there's a 230, 232, and then a 240 possibility. Or maybe you ignore all that and you just say, Thomas Lee's been killing it for 2 years. I'm going to follow what he says. Well, the guy says he thinks it's a 4-week move of 40%. So by any measure, it said, hold on to this winner for dear life. Don't be the sucker that says, can it continue? And by the way, I had people on Twitter at 217, 218, but can it continue? Well, I mean, they have their answer today. Now, am I like arrogant about it? No. Like it's so overbought, it's not even funny. It can pull back 4 points. But I do know this is such a built-in move. There is such a base we're breaking out of. Everyone knows the longer the base, the longer the chase. It's just like that. You should. So that's where we're at. Will there be some profit taking? Sure, but I'm holding on for dear life because I think there's more.
While you've, of course, been bullish IWM, as you mentioned, you have been taking advantage of the weakness in the Qs and the tech sector. We got a Lotto Monday in Inner Circle yesterday. You went long the 495 puts for today, rode them into the high of the day yesterday into the close, and you took off some, but held a trailer into today. This morning, that trailer wasn't looking so good, but now looking at that trailer, it looks really great. I haven't caught up in the room. So are you still in this trade, or did you get out of it?
Got flat. My last purchase was $1.40-ish, and they got over 2, and I got flat because they're for today. And I think when you play Lotto, you have to be cognizant of the risk involved. And I don't look to get rich. If I get lucky or make a decent call, I'm willing to miss some upside. That's kind of what I think is key to Lotto. It's not only being willing to take the risk, but it's also being willing to not look for too much. So we see a big cap selling across the board. We see many semi names weak. And although we opened higher today, right from the get-go, you saw underperformance from Nvidia, from Broadcom, from SMCI, from Micron, from Dell, which told me eventually these Qs would work. And then, once Q's cracked and we're down at 494, 493, as I said, enough's enough. It's time to take profits. And I did. Now, longer term, meaning the next few weeks, I still expect some pressure in the Qs and are looking for them perhaps to tap the 21-day, which, by the way, would be a minute correction from all-time highs, something to the tune of like, I don't know, 4%, which is nothing. So I'm still looking for more weakness in the Qs, but part of that will occur or not occur based upon ASML and Taiwan Semi, which report over the next 2 days.
I was muted. Sorry. Reminder for everyone who's here with us live, whether you're on YouTube or Twitter, Facebook, wherever you are, if you have any questions for David, comment them, get them in quick so we can make sure to answer them. You sent this tweet out after the close yesterday. You said, presently, I'm finding my alpha under the hood, short and long. 2 consecutive days of selling by the close should have you on notice. Just talk about how you are trading in this current market environment, how it might be different from earlier this year or even what you were doing 2 weeks ago.
One, real simply put, I probably have 1 or 2 shorts on every day, right? That I'm finding some alpha, either short a Tesla, which we did last week and again yesterday, and even this morning. On that gap open, I bought Tesla 250 weekly puts at $4, and I don't know, 20 minutes later they were 650, and I got flat. Rather than just drinking the Kool-Aid and assuming everything's going higher as IWM outperforms, I am a bit less bullish big cap because there's some issues here. Whether it be valuation, whether it be charts, whether it be just the size of the move Tesla just had, whether it be that they have earnings next week, you can choose your reasoning, but I just see a lot more equal-sided opportunity, both long and short, and trying to take advantage of that. I think the most clear example is the way we could add exposure in small caps on Thursday and go short the Qs. That's a very unusual trade. I'm not going to pretend it's not. It doesn't happen very often. In fact, it happened like 4 or 5 times in history. The Qs would go down 10 points and IWM would be up 4 or 5%. That's just unheard of.
Speaking of Tesla, your Tesla trades, I mean, when I'm looking in the room, you're on Tesla pretty much on a daily basis over the past few sessions, shorting long puts, but also going long when necessary. Last week, in the same day, I think it was Friday.
Is it Friday or
you were
Thursday?
shorting earlier, and then long later in the session.
Yeah, so
yesterday you were shorting Tesla pre-market. That's what this chart is here. Talk about how you've been playing this stock on both sides.
So to simplify things, a lot of guys are very specific with charts. I tend to range trade, which means when there's these huge ranges, I say if they're going to give you free money, that's a bad way to say it. If they're going to give you easier opportunity, there's no free money. But if they're going to give you easier opportunity with huge ranges, play them. So what that meant to me, simply put, is this. If they're getting short Tesla, which was not an easy trade, I never thought it would hit 270. I thought it would stop 260, 265. And getting lucky with announcement about their taxi being delayed, their big taxi event. So we kind of killed it, right? Part of it was dumb luck because we were shorting and that news came out. Then you had a literal range of 271 all the way to 233. So Friday AM, I was like, what are the odds? And there was a downgrade and a bunch of people were chasing the negative news from Thursday. What are the odds this is just going to stay down 40 points or 38 to be exact, yesterday's highs? Like the chart said, there was more downside. I ignored the chart. I was like, it's 40 points low. A lot of people miss Tesla. A lot of people were short Tesla. A lot of people still hate Tesla. A lot of people still think Tesla's got an elevated PE and it makes no sense. So the first thing I did was buy it. 235, 236, 234, 233. And then when I'm playing a range trade, I don't overthink it, meaning once we got to 240, 242, I said, listen, the odds that we're shorting at the top and then buy the bottom and capture 7, 8 points are next to zero. So if you did that with me, be thankful. Don't try and get the top. And I actually got flat and missed 6, 7 points, but that's what we did.
All right. We do have a question from Matthew on Twitter. He wants your thoughts on Netflix earnings. So just hold on, Matthew. We're going to get to Netflix earnings preview in just a little bit. But quick first, I do want to talk about a good lesson for traders. I was listening into the room this morning, and you took a loss on some AMD calls, and you were telling the room that you look at these trades and you know when it's worth taking a loss versus going through the pain of trying to turn this trade into a winner. The key is cutting your losses early and then holding on to your winners so that your winners can make up for those losses and it doesn't matter. So just talk about that lesson and what you were telling the room this morning when it comes to the AMD calls.
Sure. For anyone new or not old aged like myself, my trade that I'm most proud of today is when AMD cracked and was down 2 and then bounced and was only down 70 cents. I was long some calls. I said, time to take a loss. And that trade was perhaps my best trade because, well, if you look at AMD now, we're down $3.75, which for short-term calls is not a healthy thing, and those calls have gotten whacked. So what we are referring to is this. AMD was one of my top calls over the past month, right? I got very aggressively long, 163 through 167. It clicked and it went. Most recently, I got flat, 183, 184. That's where I got flat stop. And then I wanted to get back in because I think if there is a catch-up trade to be had, it's probably AMD. So I started some calls, not a full position, but I started some calls yesterday saying, you know what, on this pullback, I think it's time to at least start getting long. I got aggressive, meaning I bought calls further out and I only bought them for 2 weeks out. So they expire next Friday and they're 190s. And when I first bought them, I bought them at 3. They went to, I think, 390 yesterday. And I sold some, probably 370, 380, and 390, something like that. Came back in, I bought some. Closed kind of soft. This morning, and remember, so these expire next week, and they're far out of the money, so there is no intrinsic value. There's a call today from Jefferies. True or not true, the call reads horrifically. And the call is, in short, that their key AI chip is not performing up to expected capacity, that it's overheating, and that one of their key clients is actually canceling orders and moving to Nvidia. Now, I bought this because I see a PC uptick. I see the soft sides of their businesses bottoming, but the alpha, the excitement is still going to come from AI revenue ramping. And the negative note out of Jefferies, true or false, was, hey, not only is there an issue, but it's actually problematic and people are canceling the order. So how do people respond to that? Well, they're going to respond by selling, especially since the stock was 163 a couple of weeks ago. So my call's down a quick 30%. They're going to be down 70, 80% if this stock goes down 4 or 5. I don't want to be a part of that. Why not ride my IWM, have a ball with my Zeta or Immunome? We have a lot of winners, and take this loss, not ignore it, and say, we don't have enough time to ignore it. You can ignore calls, right? If you have time, or if you're not too far out of the money. I didn't have a lot of time, and I was like 12 points out of the money. So I said, taking a loss here is going to be very important. We took a loss. Update where they are now, but we took a loss well into the 2s. The 190 calls are $1.49 right now. So down like another 30% from where we sold them. And that is probably, especially for newer traders, especially short-term stuff, that's probably more important than the rest. When to say I'm wrong and just cut it.
Mm-hmm. Yeah, great. All right. So Matthew from Twitter, we're going to get to your question right now as we talk about Netflix. He said Netflix earnings report dropped 10% is his question. So here's a look at the stock as of earlier this morning, heading into this report. The purple line there is your 21-day. The orange line there is your 50-day moving average. You, of course, I know can look at a more updated chart, David, on your end. But talk about Netflix heading into the report. The report's Thursday after the market close. Yep. This is going to be our first big tech stock reporting. And we've seen some crazy action in Netflix in the past after earnings reports. So what are you expecting when it comes to this Thursday?
I am more agnostic this name than any other big cap tech name going into this print. I don't see a lot of edge either way. Everyone is going to be looking at the advertising model, how quickly it ramps, and everyone's going to be looking at password sharing. Is it continue to push additional subs? But if you remember, they are trying to guide us to focus less on subs. That's the whole key here, and focus more as a real company. When I say real, I mean a company where we look at revenue growth or lack thereof, and earnings growth and PE, and not just make it about subs. So that hint to me already suggests that is not the key to the story any longer, and they want to steer you away from that, just like Apple wanted to steer you away from handset sales and eventually said it's time to focus on services. So that said, and also kind of giving us a heads up on all this, I'm not that bearish because they've already kind of tried to change our mind in terms of how to look at a lack of sub growth, right? They're saying that that's not really the key to the story. But at the same time, everything I'm reading suggests that from key analysts and media, right, that sub growth was minimal this quarter. I read a lot that said they might miss in terms of like a valuation perspective. Last I checked, it's trading like 47, 50 times forward earnings. It's not that exciting here. It's not that exciting a short here. The chart is a bit iffy. If we break, I see the 50, then the 100. So when I play earnings, and I'm aggressive with several earnings reports, especially before and even more so after, I like to feel like you don't have to play them all, right? Some of it's potluck, a lot of it's guessing. So I need to feel like I have some sort of edge. Here's the edge I have. This is about the only edge I have. So I have a few friends I grew up with that are like no joke media guys, right? Like run Stars or ran MySpace. And all these guys say the same thing, right? I know nothing about media. They all say Netflix like owns everything. This is de facto winner, screw everyone else. And every time it gets crushed by it. And they've always been pretty right. Like every time the stock's gotten crushed, it goes back up. That's what I know, that the people in the know that know media better than anyone I know say always own Netflix, no one will ever touch them. But we're talking about a quarter, right? And the stock could be up or down 15, 20%. This quarter, I'm a little negative. I'm not going to play it. I don't feel I have an edge. Those are my thoughts on Netflix. I wish I could, excite everyone and be like, I think the play is this. This is your alpha, get short or long. I actually have less opinion on this print than I do any other Mag 7.
Okay. Another earnings report coming Thursday afternoon is Taiwan's semiconductor, TSM. So Scott wants to know if it could hit 200 on the report. What are your thoughts?
Yeah, easily. I think it'll be a great number. I think guidance will be really strong. I think the problem is Scott's got the eyes and he's all excited, and he's also talking 200. So is everyone else. So I think this is an issue for the stock. They're going to guide higher. I think the street's appetite might be a little too much, right, for what the company's actually going to guide towards. So I expect a beat and raise quarter, nothing less. Like this is, a lot of people say it's as important as Nvidia because without it, a lot can't get done. They're the biggest foundry in the world. But is there are expectations too high to make it simple? Like it might be as simple as the stock's only up 5, 7, gives way. A lot of short-term bettors sell, and 2 weeks later it makes new highs. I wouldn't be shocked if that's the path. So my thought is it's up. It's not going to meet earnings expectations for calls to pay. I think this print is really tough because expectations are so high. They've already kind of given us hints how good things are. So I just think everyone's expectations are really aggressive into the print. It's going to be a tough one. I also am a bit we're at a different stage in the market where we're also seeing big cap tech bent. So I integrate would be the right word. I integrate that philosophy into how the stock's going to react. We don't have to, there was a point in time a month or 2 months ago where that would be good enough and you just got to own big cap tech. But people are now finding you can make money elsewhere, like real money with large moves. So the need to push a stock higher when it just meets guidance expectations and doesn't blow them away may not be as strong as it has been or what we're accustomed to the past 6-7 months, right? There's been a time where just buy it, it's enough. Now I think people found other toys, pretty toys to play with that make them lots of money. I know I did. I'm not the only guy, right? There are lots of other toys out there that are going up. So I think TSM's a little harder into the print, but I think it's a great quarter and great guidance.
All right, great. Luis from YouTube says solar energy stocks look good, and he called out Run. So do you have any thoughts on the solar sector currently?
Sure. So runs up because there's, I think it's JP Morgan. Let's see, because I talked about it in their circle this morning. Someone came out with coverage with outperforming buys across the board this morning. And that's why. Oh, JP Morgan. Yeah. So for solar, just look for solar up 8, Enphase up 2, JKS, Run, they're all up, right? Run obviously leading up 8%. The only other one is Solar Edge up 12%. So here's the setup I see. You taking a look where they are, Lewis, like versus small caps? ENPH is the alpha macho man of small caps, right? The other one is Restoration Hardware. Typically with a move like this in small caps, ENPH should be right now, I kid you not, 250, 260. So if I'm you, right, I'm looking and I'm going, holy sh, I'm not going to curse, but this thing's only 115 and small caps just had their best run in 5 days I've seen. Something's wrong. And then you'd find out, oh, there is. Everyone in the industry keeps lowering guidance. It happened in Germany. Then we had someone else on Monday. So the issue, I think, is are fundamentals too difficult here? And even though small caps are working, these aren't working. That's kind of what, I mean, that literally price is telling you that. Fundamentals suck, and they might be bad enough where even though the small cap trade is on, these stocks are lagging because these stocks would all typically be much higher given IWM's move. Finally, I don't have to tell you that guy, President Trump, former President Trump, and the whole shooting and how it kind of solidified the fact that he most likely will win the race. I'm not political. I'm just simply telling you what my eyes told me due to his response. So if he is the president, are these stocks in vogue? No, they're less in vogue, thus the move yesterday. So I see meat on the bone in ENPH if you are a long-term investor. If you're thinking short-term, these stocks have a lot going against them. Fundamentals, most likely who will be your president-elect, and the charts.
All right. Ari from Twitter wants your insight on Meta.
Sure. I don't have to tell you, one of the cheaper Mag 7 names based upon its growth. Doesn't have an egregious valuation, but after talking about spending and trading down to 400, it literally had a 30-some-odd% bounce off 400 lows after the print. I know, because we were buying it. And then shorting it on the bounce. But anyway, here's my point. Everyone knows that he talked about an increased spend. An increased spend has always been kind of their Achilles heel. The stock, based upon the fact that it was still cheap and big caps were so in vogue, went straight up. Now big caps aren't like the must own anymore. So chart kind of broke, right? And it had to hold 491. And in fact, by the way, so you know, I'm not against Meta. I bought it Friday at 495s and sold it like 500 or something. But right now, for a longer term trade, it's beneath its key averages, right? It is beneath the 50-day 491s. It's beneath the 100-day, and big cap is under pressure. So my thought is this has room. I was just looking at it earlier. Where would it be a cute trade? 482-ish. And frankly, I would not size up till it had a bigger pullback. The good news is, as we get closer to numbers, Mark was pretty upfront about higher spending. So maybe the stock will be an easier buy into the print because a lot of the street, if they have a good memory, will remember he's already kind of giving you a heads up that he may not blow away numbers based on more spend. Here it's a messy chart. I see another 7-8 points of downside in the short term, especially based upon broader, cues and so on.
Right. With the current rotation that's happened in the market, the small caps are definitely leading. We've got a lot more weakness happening in tech. How do you see that influencing earnings season for these big tech names as they come up in the next few weeks?
Positively, right? There was like a no-win situation for so many of them. So if we get down moves in a CrowdStrike, in a Nvidia, in a Amazon into the print, it actually makes it so a few of these are going to be very buyable, and I think bulls will be rewarded because, quite frankly, buying high and selling higher when a lot of this news is not a surprise. Like we obviously know Nvidia is doing well, and honestly, I've seen a few people try and talk about a slowdown, so it doesn't look like there's any sort of slowdown. My opinion, Amazon's hitting on all cylinders, but we know Jeff Bezos was selling. So we get pullbacks on these. I actually think it creates some upside rather than buying, Amazon at 200, hoping for the next 20 points, or buying Apple at 235 and hoping for the next 20 points. It actually sets up well for bulls. I'm praying there's more downside so I can get long some of these, not all of them, because I really view them all differently, but I think the alpha will to the upside will be created if we have a prolonged, or it's not even prolonged, just a few week pullback, something more than 1%.
All right. What's your favorite big tech stock that you're eyeing, hoping to trade for earnings?
Amazon, because on a 3-year basis, it still trails these guys, right? After COVID, it's really done nothing. So we got to 188, then we got to 191, then we pulled back, then we finally got to 200, and here we are back 194, 193. Like it's really done nothing. Those are the all-time highs from back in 21. Yet they're producing far more cash flow. I don't mean 10%. They're producing so much more cash flow than they ever have before. As a PE on a historical basis, it's one of the lowest PEs it's ever had. Remember, Amazon doesn't trade with a low PE. That's not how you value it. If you have, you've missed the whole run for the past 15 years. Retail looks tremendously strong from the retail numbers we saw today. Even though maybe the economy's slowing, people are still out there spending money. And AWS, we have strong indication to believe that's growing. So if I'm to look at what's not priced in and what still should have upside, it's probably Amazon, and earnings and volume would probably eat through that Jeff Bezos sale, and that would probably be it. Mind you, the last time Nvidia had its cute correction of 16% to 116, 117, I bought the hell out of that stock and did sell a lot of it between 124 and 130. But if all of a sudden Nvidia corrects, it's always going to go back to Nvidia because I don't see a slowdown for at least a year or two. I do not think there's any reason to outthink things. It's all based upon price. You get a good enough correction in Nvidia, we pull back to 114, the 50-day, or even more closer to that 106, I'm not looking at the chart, but it's like 106, 107 area. Ignore everything I said and go Nvidia. We are now, like I said, later stage, in my opinion, of this wonderful bull run, which means you do have to be kind of very attentive to details. So I won't just throw out a name out there. It'll be based upon price. So you give me Amazon 187 pre the print and nothing else is pulling back that much, it's Amazon. You give me Nvidia, right, down a quick 10% from here, and it's 1,000% going to be Nvidia. So it's going to be based upon price. But those two are where my focus is still.
All right, everyone, if you want to hear more of David's thoughts on Mag 7, we got another live event coming up later after the close. So come back to T3 Live's YouTube or Twitter or wherever. He'll be on with Scott and Derek later tonight talking about Mag 7. Okay, one last question, and then I'll let you go back to trading. Okay, two more questions. I'll let you go back to trading because they just came in just now. Naveed from Twitter wants to know your thoughts. He says, Nvidia, many keep arguing how its rise is Cisco-like. Do you have any thoughts?
Yeah, those people are idiots.
All right. Do not agree.
I mean, okay, I'll say it. So I was there. Cisco traded.
Nvidia has the legs for this to be obviously.
It's not that. It's just if you have half a brain or you're old like me, one traded at 100 times earnings and the other trades 35, 40 times. Let's start there.
Yeah.
Secondly, if you're around for the telecom bubble like I was, you understand everyone's building pipe. They were building pipe based on a perceived need. Everyone with me thus far? We didn't know how much pipe was needed. Then they overbuilt pipe and broadband and everything, and we didn't need that much then. And all of a sudden, it was over, and there was oversupply. Now let's backtrack for a second. Do you think we're even remotely close to the needs of what everyone needs for AI and for LLM? No, but will there be ebbs and flows as people try and monetize it? Will there be issues where people have to slow down their build out, especially the mega caps, right? The Amazons and the Googles, so they can monetize it so they don't destroy their earnings? Absolutely. But are we even close to oversupply? I mean, we're talking about like huge nations are buying this stuff to build out. So no, we're not like, it's not like where you're building out pipe for the internet, or you built out too much. It turns out that we don't need that much right now, and then the world's ending. This is kind of, I don't know, the stocks may be in seventh or eighth inning. I get it. Some of them have value maybe 2 years forward into their numbers, and they need to pull back to be viable. But in terms of the actual story, right, in terms of orders, in terms of large language models, in terms of perfecting things, in terms of like Nvidia being a software company as much as it is a hardware company, in terms of having margins of 70, 80%, no, it's nothing like Cisco. Now, if you are kind of like a lazy investor who just doesn't want to do the homework, can you say this is the poster child of this bull market and it's gone up too much and it's too far away from the 50-day and 100-day? Sure, if you look at things in such a mundane fashion that you don't want to go through earnings or what AI entails or what the telecom bubble was or how CLECs were built that were the guys ordering from Cisco that were all built on leverage. By the way, do you know who the customers are from Nvidia? They're like the highest earnings companies in the history of the world. They're not CLECs going out of business, leveraged in debt left and right. So you have to look at who the customers are. It's just, sorry to be dramatic, it pisses me off because it's so idiotic. The customers for these chips are earning billions of dollars. The customers for Cisco not only weren't earning money, they were raising more and more debt and losing more and more money. So it's a whole different scenario. But can Nvidia pull back simply because people are tired of buying the same story over and over? And there could be a lull in AI, and maybe it's a little stretched on its moving averages. That could happen. It's not the same as Cisco.
All right. And we'll end here. Ari wants to know what you think of MicroStrategy after the split. They announced their 10-for-1 stock split last week. I'm not sure exactly when it takes effect, but what are your thoughts on the split?
I mean, Bitcoin's been awesome. I've been riding it with IBIT. HUT has been phenomenal. Sadly, I missed MSTR. I think on pullbacks, you can buy it. The run in Bitcoin, I was pretty aggressive at 55, 56,000. I left some room to buy more at 50. Of course, when I do that, I don't get lucky and we go straight up. But now we've basically rallied like literally $9,000. So I think we take a rest here. I think you'll get cute pullbacks in MicroStrategy and can buy it. Listen, Michael Saylor, I told Redler and his whole group years ago, and I told Inner Circle, Michael Saylor is no joke. I mean, I met the guy years ago. The guy is smart as they can be. MicroStrategy on a pullback is a buy. Bottom line. I mean, the guy's just smart. I mean, I'm an idiot. Guys like him blow my mind. So yeah, you want to own it on pullbacks. A lot's built in right now. We just rallied 300-400 points in a straight line. So I'd wait for a pullback. But I'm also more conservative. I don't chase things.
All right. Anyone who wants to work with David, again, here's your reminder. You can go to t3live.com/DP to apply for the Inner Circle. This is a screenshot from the room from that Tesla short that we were talking about.
By the way,
earlier.
Can we the next time Naveed asks a dumb question like that, just cut him out of the thing. Just cut him out. He's a buddy of mine, so we could do that, right? I'm like, what kind of dumb?
He did say thank you for the details. So he did appreciate your answer. And
I don't know. Maybe he was just trying to set someone straight. I can't believe he asked that question. All right.
Yeah, I don't know if he was saying he agrees. He was just asking if you agree with what everyone else is saying. So he said,
I love him. He's a dear friend, so I can say that.
I know.
Hey,
all right. So if you want to be like these people, thank you, David. If you want to be like these people in Inner Circle, you can go to t3live.com/DP to apply so you don't miss David's next big trade. It's an exciting room. I listen in throughout most of my day while I'm working, and they have a lot going on in there. Good environment, good group, I think, to be with. So t3live.com/DP. All right, David, I'll let you go.
Thanks for joining us
everyone,
all.
a reminder, he'll be back live later today, so you can hear more from David around 4:30.
Have a great day.
Today. We'll see you here next week. All right,
bye-bye.